You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, 30th day of May, 2025. Can you believe that 2025 is almost halfway over? When I was a kid, my mom said, the older you get, the faster time goes. I used to laugh at her. I would say, Mom, you're such a hillbilly. There's 24 hours in a day. It doesn't matter how old you are. Yeah. Okay. Well, Mom, I'm looking heavenward here. You were right. About everything. Okay. Well, thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first broadcast is private. You got to be a member or taking your 1-week free trial to get into the morning broadcast. If you have not yet taken your 1-week free trial, go to mytradingiq.com. At the top of the page, there's a big purple button. You can't miss it. Click it. Fill out the form. Hit submit. We'll get your indicators up and running today. You'll have the weekend to kind of get used to them or play around with them. Your trial will officially start Monday morning and run through. Actually, it'll start Sunday night because that's when we go to work, Sunday night at 6 p.m. Eastern. And it'll run all through next week. There's no credit card required. We want you to focus on what's being taught so that at the end of the trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. Now, when you take the trial, you're not just getting into the live trading room. What's going to happen is for 5 consecutive trading days, that would be Sunday night through next Friday afternoon, we're going to treat you just like you were a passport holder. So you'll get to experience everything. Our channels in Telegram, the alerts, all of it. How else can you make a well-informed, intelligent decision as to whether or not this is right for you? So, if you haven't taken your 1-week free trial, and you only get 2 per lifetime, and they got to be 6 months apart. And yeah, sadly, we have to track IP addresses. So, if you've already taken the trial, you should be able to make your decision. But enough of that. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back for this broadcast, the noon broadcast, which, unlike the morning broadcast, this one is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's two different ways you can join this afternoon broadcast live. The best way, I'll give it to you first, is you only have to do it once. Go to mytradingiq.com, but this time scroll down the page to where it says Noon Broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward, every trading day, you'll get an email about an hour before this broadcast starts. In the email, there will be a link. At 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, the benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. For those of you who tune in via YouTube, which I'll get to in a minute, I'm not able to monitor that question box until Michael shows up at the top of the hour, okay? But if you do it the way I just explained, you can start asking questions as soon as we go live. Of course, there'll be days you're out of the office, away from the desktop, maybe on vacation, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That is the Christian Financial Radio Network since 2005. But you don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. Now, if you're new to our little corner of the world, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But it is a great resource to have at your fingertips, and it kind of lets you know we've been around a minute or two or three. youtube.com/CFRN. This is our schedule for each afternoon broadcast. So we're going to just dive right on into our daily devotional. Now, we started a new topic yesterday. God's inheritance plan. What Proverbs 13:22 actually means. Yesterday we talked about more than money. Let me give you today's scripture. Proverbs 24, verses 3 through 4, from the Message translation. It takes wisdom to build a house, and understanding to set it on a firm foundation. It takes knowledge to furnish its rooms with fine furniture and beautiful draperies. Again, Proverbs 24, verses 3 through 4. So yesterday we talked about God's inheritance plan being more than just money. So today, day 2 of 3, we'll talk about the 5 capitals. And that's capitals with an A, not an O. When Solomon wrote about building a house in Proverbs 24, he wasn't just talking about construction. He was describing the process of establishing a family legacy that would endure through generations. Notice the progression. Wisdom builds, understanding establishes, and knowledge fills the house with treasures. This reveals a fundamental truth about biblical inheritance. It's built layer by layer, with each type of capital supporting the others. So today we're going to explore the 5 capitals that I believe we're called to pass down. Number 1, financial capital. This includes monetary assets, property, investments, and resources that provide opportunity. God does intend for His people to build and transfer material wealth when possible. In Proverbs 13:22, we read, "The wealth of the sinner is stored up for the righteous." Now, let me just throw one little thing out right here. Some people think God wants you to be broke. Now, when you send your kids to school, do you want to send them with holes in their shoes? Do you want them to have to get the free lunch ticket? When I was a kid in elementary school, that was so cringeworthy. Every Monday morning, the teacher would do roll call in homeroom, and then you would line up, and everybody would pay for their lunch for the week. And then after we all sat down, then the teacher would say, "Now those who get the free lunch, you can line up." And she would hand them these little tickets. In first grade, I cringed over that. I go, this isn't right. So, anyway. Number 2, wisdom capital. So, let me finish that thought. God doesn't want you pulling up to church on Sunday morning with a car that's got one bumper hanging off and your tires going boop, 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 boop. No. Now, I'm not saying that God's going to bless you with many houses on this earth and a yacht and your own plane. Maybe that is God's plan for you. I don't know. The only plan I have to worry about is the plan God has for me. So just remember that when God blesses you, the reason He blesses you is so that you can be a blessing to others. But that does not mean you have to take some crazy vow of poverty, okay? So number 2 is wisdom capital. Financial literacy, discernment and decision making, and practical knowledge passed through mentorship. Proverbs 16:16. How much better to get wisdom than gold, to get insight rather than silver. Now, yesterday, my godson, Little D, but we don't call him Little D anymore because he's as big as I am. But he has my name, first and middle name. As you all know, he's from Africa. But he came home, paid his rent before the 1st. I was like, wow, that's cool. And then he said this. He says, Grandpa, he said, it's really nice that I know when I'm going to get paid and how much I'm going to get paid because I'm able to budget. Okay, this paycheck, I'm going to pay these bills. This paycheck, I'm going to pay these bills. Now, he's not even 21 yet. Do you have young people in your life that know how to balance a checkbook or create a budget? I know balancing a checkbook's kind of old school, but I was deeply touched that we had an influence on him over the last, 3 years he's been living with us. That he's doing the things I wish I had done as a young man. I was so proud. Number 3, spiritual capital. You can be proud of something and it doesn't have to be pride, okay? So, Spiritual capital, a living faith modeled daily, a heritage of prayer, godly values deeply instilled. Psalm 78:4. We will tell the next generation the praiseworthy deeds of the Lord. Number 4, social capital, healthy family relationships, connections to faith community, and networks of support. Ecclesiastes 4:9. Two are better than one. If either of them falls down, one can help the other up. And number 5, character capital, integrity, work ethic, resilience, and generosity. Proverbs 20, verse 7. The righteous lead blameless lives. Blessed are their children after them. Now I'm going to tell you something. Sometimes you think your kids aren't listening to you, that whatever you say goes in one ear and out the other. And that's pretty much true, I think, in a lot of cases. But even if they aren't listening, they're watching. Okay? Now, picture this. Your home is a literal hellhole. People yelling, screaming, cussing, whatever. But then as a family, when you all go to church, everybody puts on their church face. Oh, hi, brother. God bless you, brother. How you doing? Oh, highly favored and blessed of God. All that Christianese. If your child sees you model one behavior at home and another behavior at church or in some other social or public setting, they're gonna know that you're really a hypocrite. Now, I know people say church is full of hypocrites. The world is full of hypocrites. You have to look no further than Capitol Hill or the legacy media. Jig Tapper. Okay, notice how these 5 capitals interweave and reinforce each other. Financial capital provides opportunities to develop wisdom. Character capital enables proper stewardship of financial resources. Spiritual capital shapes character and social connections. In Jesus' parable of the talents, Matthew 25:14 through 30, the master entrusted his servants with financial resources. But what he was really doing was measuring their character and wisdom in handling those resources. The inheritance they received included both the original capital and the opportunity to develop the capacity to manage it. So today, consider which of these 5 capitals you're intentionally building and transferring. And then ask yourself, which one needs more attention? Let's pray. Heavenly Father, thank you for entrusting us with resources of all kinds. Help us to be intentional about building each of these 5 capitals. Show us where we're neglecting important aspects of the inheritance you want us to leave. May our descendants receive not just we have, but what we know, who we love, and most importantly, who we serve. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Friday. Let me give you the numbers from around the world. We're going to start here in the U.S. with the cash markets, or the indices, as they're called. First, the Dow, down 78 points. The NASDAQ, down 148. S&P 500, down 28. And the Russell 2000, down 8. In the commodity basket, Crude oil down 64 cents, trading 60.30 last. That's a drop of a little over 1%, or $620 per contract traded. Gold's off another $28.50, trading 32.8860 last. And silver's off 36 cents, trading 33.06 last. That's a drop of over 1%. In the Asian markets at the close, the Nikkei dropped 467 points, 1.25%. Shanghai dropped 15. The Hang Seng fell 283 points, almost 1.25%. And in the European markets at the close, FTSE up 55, the DAX up 64, the CAC down 27. So we had a red day in Asia. It was a mixed day for the UK. And so far, it's a red radio Friday here in the US of A. Now, we're not deeply in the red, but they're all four red. And remember, we like to see all of the major indices the same color. As futures traders, we don't care if they're all four red or all four green. But the bottom line is when they're the same color, you get better follow through on your trades. As futures traders, we can be long, short, long again, all in the same hour, if that's what the chart in front of us is telling us to do. So now that you have the numbers, let me bring you some news. A U.S. appeals court temporarily reinstated the Trump administration's reciprocal tariffs yesterday, while it reviews a lower court ruling blocking the new import levies. The latest action comes a day after the U.S. Court of International Trade ordered the administration to stop most of its new levies, including a 10% baseline import tariff, or nearly all U.S. trading partners, within 10 days. The ruling argued President Trump exceeded his authority by using a 1977 Emergency Powers Law to impose tariffs. Trump has used the tariffs to lure manufacturing back to the U.S., potentially reduce federal deficits, and gain leverage to negotiate more favorable trade deals. And these turncoat judges, because of their political leaning, got to get in the way. The federal court decision is now stayed through June 9, when the appeals court will hear arguments in the case. The tariffs, however, remain blocked for two small Illinois-based toy importers under a separate ruling issued by a federal judge in Washington, D.C. Analysts say the legal back and forth has introduced uncertainty into U.S. trade policy, potentially impacting ongoing negotiations. Now, Trump wasn't blindsided by this, but he had hoped that this trade board of these three judges would see the benefit of what he's doing. I mean, he's already brought home like $15 trillion in investments, creating factories and jobs here in the US of A. But no, they don't want that. They want to let all the criminals out of jail. They want the border wide open. And they want to let the world continue to screw us, as they've done for a very long time. Also, the U.S. says it will begin revoking visas for some Chinese students, particularly those tied to the Chinese Communist Party or enrolled in critical fields, citing concerns over intellectual property theft and espionage. The move is part of a broader effort to protect critical technologies and will be paired with increased scrutiny of future visa applications from China and Hong Kong. That is so long overdue. And it's climbing season at Mount Everest, but it ends this weekend, capping a weeks-long period in which 468 people from 57 countries receive permits from Nepal to ascend the mountain. Can you imagine? I can't. I mean, I like a nice hike every now and then, but climbing Everest? Yikes. President Donald Trump lashed out at China this morning on Truth Social, saying China had violated its trade deal with the U.S. The bad news is that China, perhaps not surprising to some, has totally violated its agreement with us. So much for being Mr. Nice Guy, Trump wrote. He's mad. Trump did not specify how China allegedly broke the agreement, but his comments added to a growing list of complaints from U.S. officials. During an interview with CNBC, U.S. Trade Representative Jameson Greer claimed the Chinese were slow-rolling their compliance. And Treasury Secretary Scott Bessent earlier told Fox News that trade talks between the U.S. and China are a bit stalled, saying a call between Trump and China's Xi may be needed. See, these three judges, they're making us look weak. How un-American. Treasonous. From Bloomberg. Buried deep in the more than 1,000-page tax and spending bill that President Donald Trump is muscling through Congress is an obscure tax measure that's setting off alarms on Wall Street and beyond. The item introduced in legislation that passed the House last week as Section 899 and titled Enforcement of Remedies Against Unfair Foreign Taxes calls for, among other things, increasing tax rates for individuals and companies from countries whose tax policies the U.S. deems discriminatory. This includes raising tax rates on passive income, such as interest and dividends, earned by investors who are potentially sitting on trillions in American assets. Cloaked in technicalities, the implication of the revenge measure, as they're calling it, is quickly becoming known, is clear to analysts. If signed into law, it would further drive away foreign investors at a time when their once ironclad confidence in Treasury bonds and other U.S. assets has already been shaken by Trump's erratic trade policies and the nation's deteriorating fiscal accounts. Nothing could be further from the doggone truth. He's brought $15 trillion in investments home. Somebody needs to give Wall Street a thump on the back of the head, the way Granny Reeves used to do if you cut up in church. Now, this should get your blood boiling. A cooler inflation reading from the month when President Trump's tariffs went full blast likely won't shake the Federal Reserve's stance of holding interest rates steady, with policymakers still seeing a risk that duties push prices higher as the year progresses. We'll have to wait until next month to get a real sense of how tariffs are affecting the economy, according to Morgan Stanley. The question isn't whether tariffs will have an impact. It's a question of how big the impact will be. The Core Personal Consumption Expenditures Index, which strips out food and energy costs and is closely watched by the central bank, rose 2.5% on an annual basis in April. The Fed's goal is to get this number down to 2%. The new reading was in line with expectations and cooler than the 2.7% annualized change recorded in March. Core prices rose 0.1% in April from the prior month, in line with expectations for a 0.1% increase and the monthly increase seen in March. So, Jerome admits the economy is so good and inflation is so low, but I'm just afraid. No, it's the oligarchs that Jerome works for who own the Federal Reserve. They don't want to see those rates go down because then they make less money. even though they already got more money than they could ever spend. From Reuters, one of Microsoft's subsidiaries in Russia plans to file for bankruptcy, according to a note published on the official Fedreserve's registry on Friday. Microsoft did not immediately respond to an emailed request for comment. Vladimir Putin said this week that foreign service providers like Microsoft and Zoom should be throttled in Russia to make way for domestic software solutions. Yeah, because they've already stole our technology. And homeowners eager to sell may have to wait a while before a buyer comes along. As of April, the U.S. housing market had nearly 34% more sellers than buyers shopping for a home, according to Redfin. Aside from April of 2020, when the pandemic brought the economy and home sales activity to a standstill, there haven't been this few buyers in the market for a home based on records that date back to 2013. Now, the trend is good news for home shoppers if they can afford to buy at current mortgage rates and prices, which are still rising nationally, albeit more slowly. Jerome Powell is going to own this. From Bloomberg, oil extended its weekly decline today, choppy trading on heightened prospects of more supply from OPEC, and as U.S. President Donald Trump reignited trade tensions with China. And last, have you ever eaten at Red Robin, the gourmet burger joint? Well, their shares, the symbol is RRGB, shares soared 75% in early trading today, a day after the casual restaurant chain reported a surprising first quarter profit. The Englewood, Colorado-based company swung to an adjusted profit of 19 cents per share, when a loss of 56 cents per share was expected by analysts. Whoa! Analysts thought they would lose 56 cents a share, but they actually gained 19 cents per share. It has posted a Q1 adjusted loss of 0.73 cents per share a year ago. What a turnaround. Revenue rose 1% year over year to $392.4 million, when a slight decline was actually anticipated. Comparable restaurant revenue of 3.1% also topped projections. So now we go to the local news. Logic 247. What'd I do? There we go. Okay. Logic 247 is our 24/7 around-the-clock E-mini alert service. Not just E-minis, but also crude, gold, and silver. Over the last 356 weeks, we have issued over 19,750 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and the simple process we teach all of our passport holders. Now, you'll notice this recap was done last night at 9 p.m. Eastern. So a lot has changed. But Valerie is out of town for the weekend visiting family. She won't be back until Sunday afternoon. So Sunday afternoon, Valerie will finalize the recap for the week. And based on what I've seen, I think the numbers are going to get better than they already are. But we'll see, that's her job, and I'll leave it to her. But when she did the recap last night, since the markets opened this past Sunday night at 6 p.m. Eastern, we've issued a total of 60 alerts this week, 4 never triggered, still waiting on the outcome of 16. That gave us 48 actionable alerts, of which 3 or 8% would have been stopped out. Again, based on simple market structure and the simple process we teach all passport holders. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Every logic alert has an entry price, an initial target designed to help you get your goal for the day, and then usually additional targets and then a final trade to target. Yes, you can trade them, but I pray that you use these alerts not only to trade, but for the real purpose intended, and that's so that you learn how to read a chart. Whatever profession you pursue, you got to be able to read the textbooks to get through school and graduate, right? Okay. Well, if your chosen profession is a trader, you got to be able to read the charts. But charts, they don't have any words, sentences, paragraphs, or punctuation. It's a completely different language. And until you learn it, your dreams of becoming someone who trades for a living, well, it might be a little shaky. All right. Now, I've said when we hit 20,000, remember we're at 19,750, I believe. So next week we'll probably come close to 19,000. No, next week we will hit 19,800. I don't know what I'm going to do differently or in place of, but while you have the chance, make sure you use these to learn how to read the charts. Okay? Now, that's a long time, 356 weeks, but believe it or not, years before I dreamed up Logic 247, we had our original alert service, the concierge trade alerts, and they're different. Different how? I'm going to show you. Number one, they don't come out around the clock. They're published most days 5 minutes ahead of the market open. You see, the Friday session that we're in right now started last night at 6 p.m. Eastern. But all of our members and all of our trial members had all of these targets 5 minutes before the market even opened. ES, the Dow, the Russell, crude, NQ, gold, and silver. Now, after I published the CTAs last night, I realized I needed to roll gold to the Q contract. So gold's still tradable today, but you want to roll to the Q contract. So I came back and I did an additional set of CTAs just for the Q contract on gold. And when we go through each of these individual markets, as we do every day, I'll show you the M and I'll show you the Q. Okay? Okay. All right. So with that, we can go to the charts. And we'll start where we always do, with the bellwether. That would be the S&P 500 E-mini futures. Oh my goodness, we've took quite a tumble. Let me hang on my other screen here. I got a trade working. How's that thing going? Oh, sweet. Guys, remember in the live training room, I said you might want to consider selling $58.99. We're currently at $58.69. And my trade's already closed itself out because it hit its target. I was using the 50 range. Yeah, I use the 50 range quite a bit. I really like it. So, back to. Okay. We know this was on that news that came out, what was it, Wednesday night? I guess it was Thursday night. Is this the Friday candle? Yeah. Oh yeah, it was right after the close Wednesday night. Some news came out about the tariffs and the markets flew up and folded. We're below red and falling, and we're now below the step line. So where do we expect support? At the BBC. The green line is called the BBC. It stands for Bull Bear Cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. I want you to notice that when price pulls back to the BBC, like it did here, 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 and here, and then once we got above it, the pullback held and the pullback held, and we're going to find out if this pullback holds. The point is the pullback holds more often than it doesn't. But eventually it'll trade through like it did February 21st and like it did on April 24th. Also, the daily chart is important. I know you don't trade it, but whether you're a stock trader, a futures trader, crypto, Forex, ETF, I encourage you to spend 2 minutes with the daily chart of whatever you're getting ready to trade on your smaller time frames. It's called the top-down approach. See what's happening in the big picture. It will help you be more profitable in the small picture. Okay. Now, institutional traders, those deep pockets, they're the ones who actually move price. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. So what I'm encouraging you to do is bring up the daily chart of whatever you're about to trade and get a free look at what the deep pockets are doing. If they're selling, do you really want to be buying? Do you? Now, not only can you see what the deep pockets are doing, but you're able to identify major areas of potential resistance, like red and falling, this high, this double top, this previous bearish cross, okay? And you're able to identify major areas of support. If you're just on your smaller time frame, you don't know that the daily BBC is currently at 58.23. And remember, the pullback holds more often than not. So you could be just having a good old time shorting the market, and all of a sudden you get steamrolled. It's because you didn't look at the big picture. Okay? Okay. Now, all alerts are created on the 30-minute chart. Okay. Hang on, somebody just sent a message. Oh, that's very kind of you, Paul. Thank you so much. Thank you. I really appreciate that. Okay. So, all alerts are created on the 30-minute chart. Now, these vertical lines separate today, Friday. Here's Thursday. Here's Wednesday. Here's Tuesday, and I could go further. When price drops to a weekly trading zone, we expect support. And when price rallies up to a weekly trading zone, we expect resistance until proven otherwise. Okay. Now, we've published the weekly zones for almost 15 and a half years, every Monday, for our members and trial members. And it's a tool I wouldn't want to trade without, just to be honest. Now, back earlier in the week, live during the afternoon broadcast, I drew in this window, which after the broadcast filled, and then filled again. And you'll notice over here, it even filled again. Okay. I also drew in this window on the same day, and this window on the same day. Well, that window filled. Now the window I drew yesterday, it only went halfway. And I think it might have been after the broadcast on this one, and I posted it in the discussion group. And I wrote under it, well, guess it's not a perfect science. I never said it was. But the thing is red and falling got below price, and when red and falling gets below price, it turns into support because it's probably on its way to becoming blue and climbing. So we hit, now on the way down, red and falling is your friend, but when it gets directly below price, support, and look where it's sent price, right up to the zone and the BBC. Resistance times 2. Now right here is where the market opened last night. This candle right here. Now keep in mind, our members had these targets 5 minutes before the market opened. So we had blue and climbing, but once it turned to red and falling, bang, we hit the short target. Or we missed it by a couple ticks. Support bounced us up into resistance at red and falling, and then that sent this candle down, which beautifully filled this box, this window of opportunity that I had drawn yesterday afternoon. And then the market found support in an area where I would not have called for support at that particular. But remember, out of all the logic alerts we've issued, 20% of the time or less, the market does something different than what we thought it was going to do. You have to accept that, okay? Don't fret over it. Don't waste time and treasure trying to figure out why. Just roll with it. Go find the next opportunity. So price found support here. Buyers came in for whatever the reason, drove us up to the BBC, and the pullback held. And you see all these wicks sticking up to the top. I mean, buyers eventually, when they see that they can't move price, the institutional guys, they're going to hit pause on the buy button. And when they do, look what happens. Right here. Okay? That was 8 a.m. this morning. Now the zone is 5873/74. But take a look at this window that I drew that had not yet filled. Remember yesterday we came right down to the top of the window? Well, last night or this morning, we filled that window, and look at this low right there. It's exactly at the bottom of that window. Okay? This is what I mean by market structure. So when the market finds support, it's going to go look for resistance, back to support, back to resistance, and then that big drop. And remember, only one of 3 things happens when price encounters a weekly zone. 70% of the time, it's going to be consolidation. 70% of the time. 20% of the time, rejection. 10% of the time, the slice. That's when price slices through the zone on a 30-minute chart like it's not even there. Like here. But when it ran out of steam, it retraced back to the zone it sliced through and then continued in the direction of the slice. So this old window here, it filled here and then it filled again. And it was based off May 27th, 3 days ago. Friday, Thursday, Wednesday. Wednesday I drew it, but I was basing it off this on Tuesday. And here it is still paying us on Friday. And remember, these zones, because Monday was a holiday, these zones weren't published until, and there's more zones that you can't see in this screen, above and below. When Monday's a big holiday and the markets are closed, the zones come out Tuesday morning at 6:15 a.m. Eastern. But on a normal week, they come out Monday morning, 6:15 a.m. Eastern. And they're doing their job. The market found support here. We've spiked it. Now we could head down to the next zone, which would kind of be in line with what we saw on the daily chart, right? The daily BBC is at 58.22, and 58.22 is right here. Let's see if we can find a window. Now, that's not a true gap. There was a problem Sunday night with the gain servers, and I thought the data would eventually fill in, but it never did. So, I'm a little... When it's not simple and obvious, I don't do it. And so, because I don't have the data that belongs here, but you know what? Now, exercise caution. That's not what I wanted. Exercise caution with this. So I'm going all the way back here to Friday. Okay. So I know that doesn't look like a lot. Let's call it 58.48 to 58.45. This 3 points. Okay. That's not my best work because of this, so you can ignore that one if you want. Or find your own window. That's what I want you to do. I want you to find your own windows. Okay, the Dow. This is where we opened last night. We traded, we were below the BBC, so we're thinking short. We got below blue and climbing. Blue and climbing turned to red and falling, and then we dropped to the target. Come on. And we missed it by a couple ticks. But there was plenty of room to get your goal for the day there. Now, when the market finds support, buyers came in a little early. I was expecting them to come in right here at this low. They came in a little early. Back to the BBC, the pullback held, and we just consolidated overnight a lot at the BBC. And then we dropped again to the target and to the zone. Buyers come in, okay, they drive us up. Now we spiked the BBC. This is the 10 o'clock candle, okay. Now we took out this high by just a little bit. See those two wicks sticking up above the red horizontal line on my cursor? We're always suspicious of just a little bit. And here's what happened. Right down to the zone where the market is finding support. Now it looks like it may trade. Your next area for potential support would be here. Oh, 41,940 to 41,890. Is that 60 points? Only takes 20 points to get your goal for the day. So that if this window fills, that would be your goal for the day times 3. Russell. Here's where we opened last night. We found support at the zone. And then we dropped down. It's like an obsessive compulsive thing. See that one wick came down? Hit the short target. Support sent us back to the BBC. Resistance. Back to the zone support. Took a little dip. But the pullback held. And we hit the short target. And then we went back up to resistance at the zone. And this pullback held. You're going, yeah, but those candles are way above the BBC, but they're still touching. As long as it doesn't pull away from the BBC, the pullback holds. And you've got a high, a lower high, and a lower high. Now you got that. got here? See, that doggone, yeah, I'm going to leave it alone. Okay. NQ. Here's where we opened last night. We hit blue and climbing, bounced up to the step line, and then hit the target. Okay. And then we spiked the target. And is there any good reason for support there? Not really. Everything seems to be a little bit off today. Buyers came in, sent us back to resistance at the BBC. We hit the target, we hit the target, we hit the target. Now look where we are. Yikes. NQ's getting hammered. That's what he said. Alright. I'm going to really have to clean these charts up after all this. Right there. Friday, Thursday, Wednesday, Tuesday, Monday, Friday. I'm keying off last Friday's candle to give you this window, which goes from 21,020. Let's call it 140 points. At $20 a point, is that $2,800 per contract traded? If my math's wrong, correct me. I did that off the top of my head. I think it's close. Crude oil. Who texts me when I'm working? Okay, never mind. Crude oil. Here's where we open. Dropped to the short target and the zone. Consolidated. Red and falling turned to blue and climbing. And took us up to the long target. I think we missed it by a tick. We missed it by 3 ticks. Okay. And that resistance sent us down to the short target. And now we consolidated it quite a bit. And I think we're going to go to the zone below. How far back? You know what? We'll cover that when I come back. We'll look at it again because Michael's here. He's going to give us a recap of what happened in the live training room this morning and do some live trading on the TradingView platform. I'll come back, finish my recap, and close out the week with our good word for the day.
All right.
Oh, and Michael, you remember when in the live training room, when I said some of you might want to consider a short at, I just showed it to everybody.
Oh, I'm sorry. I just took the charts away from you.
That's okay.
Yes.
I was using the 50 range.
Mm-hmm.
Got all 50 ticks.
Sweet.
That is. Yeah. Love that
Especially
on a Friday.
Awesome.
I'm done for the day.
Excellent. Excellent. Yeah, we got down below the black step line right there.
Yep.
Still going down to the BBC.
Yep.
And that's all in the recording. I got that in the recording that I made too, I think. Didn't I, Dwayne?
Yeah, I think you did. You did. Okay, your screens look great, so I'm going to turn it over to you.
Okay, good. Here we go. Let me move things around just a little bit on my side. All right. That is gold, Russell, yes. Okay. All right. Good afternoon, everyone. Today is Friday, the final trading day of May 2025. Now, if you have not taken a free trial with us, you can take it right now. Get all of next week and the rest of today and over the weekend. Click on this purple button right here. There's no credit card required for the trial. Okay, see that right there? No credit card required for the trial. Click on the purple button. It's going to bring you to this registration page, which has next week's stuff in it. Gives your first name, your last name, your email, your phone number. Down here at the bottom, gives you TradingView login ID. If you do not have a TradingView login ID, click on this link right here and go get one. Okay. It's a pretty simple process. Doesn't cost you any money to get the TradingView login ID. Once you get that, you'll be able to get the indicators indicating on your desktop. You're going to need to get real-time data, whether you transfer it from your brokerage to TradingView or you pay the $7 a month for the data from TradingView. You're going to need to get real-time data. All right. And that is also in this video. If you click on this link, it's going to bring you here. Just watch this video right here. Shows you how to do all that stuff. Okay. Okay. The spreadsheet. Here we are. Now, today is the final day of May 2025. We've made 98 ticks on the NQ, 30 ticks on the Russell, 16 ticks on gold, and 23 ticks on the ES. That put us at 1,087.5 on the morning session. Today it took 7 minutes and 4 trades to get to the goal for the day. At that point, we're up 16.50. We took a total of 25 trades. So on the month now, we're at $20,652. It's over 19 business days, averaging $1,086 per contract per 2-hour business day. Now, I was trying to get to 20,000 by the end of the month, and we just did it today. We were up a little higher at one point, but we stopped out on gold in one of the last trades that we did. But we'll get into that. On the year now, so far we've gotten the goal on 91 out of 91 days that I've traded. We've gone 105 trading days now since my last non-green day, and 500 trading days now since my last red day. 500 trading days since I didn't get $100 and I ended negative. You gotta set a goal that you can achieve every day, right? If I were to raise that goal up to like $1,000, maybe $500, then you'd see probably more red days. Not really more red days, but more non-green days anyway. But as it is, most of the days I do better than that. You just seen a couple of them this month. Would have been one right there. It's under 500, and one right there was under 500. That's talking about raising it 5 times what it normally is. There would have been none last month. None the month before that. One there. That's February, so we had 4 so far this year. 5 so far this year. 5 days that would not have been, they would have been blue, I guess. Well, I don't know. I probably got the goal for the day. I probably got over 500 and then got back down below 500 on those days. So I wouldn't know until I actually went back and looked at it, but it doesn't matter. As it stands, we're ending the month of May at $20,652 with one contract. And we are now on the year at $140,470 over 91 days, averaging $1,543 per contract per day. On the month, we average $1,086. If you were doing the 2420 blueprint and adding 1 contract a month starting Monday, you would be adding 6. You'd be trading 6 contracts. All right, so these will reflect 6 contracts starting Monday. And I think I got to carry those numbers down here, don't I? I guess I already did. 13,550, 13,550, 133 and 3, 133 and 53. This should be 53 on this one. Anyway, you'd be averaging $3,846 per hour. All right, you'd be up 45,522. You'd have only had to work just a little under 12 hours this year. All right, that is pretty good money if you can get it. Let's look at this one right here. This is the right one. Okay. So today we had gold had the most trades in it. So we'll come back to gold. We'll start out with the Russell. Okay. We actually had a pretty good day today compared to yesterday on the Russell. We only took a few trades on the Russell. No, we took 5 trades on the Russell. But we had 3 positives and 2 break-evens, I think. 2, 3. Well, we had 2 break-evens, and I don't have the other one in there. But you can see the Russell was trending pretty nicely here. You had some nice long leg lengths. And when you have the long leg lengths, the conservative trades are the ones that you want to do. Okay, let me put the question box out so I can see any questions that come in. So our first trade here on the NQ, we picked up 10 ticks. And the next trade right here, we picked up another 10. Then the third trade over here, we picked up another 10. That got us to 30. And we had a break even there, and we had one other break even somewhere during the day. That put us to 5 trades on the Russell. Okay, now during the break, there was a trade right here that wasn't really a great place to trade, right? On the pullback, if you were aggressive, let's just look at that. If you were aggressive on this, you would have been pulling from way back here, right? So that wouldn't have worked out being aggressive there. But if you're aggressive on this leg length, the open of that bar right there is when it went into the oversold. That could have been something you did right there, but I didn't do any of that. It turned around and flipped down. It gave you some opportunities right in here. Not really great opportunities the way it was running. It was a slow grind, so it didn't really give a bunch of great opportunities. You could have done aggressive right here with this little bit of a leg length. Done aggressive there. Same thing here. Done aggressive on this down close right here, but I wouldn't have done any of that. All right, then we started getting some decent sized leg lengths over here for a little while, and then it got all choppy and sideways. So you would have been doing just these little kind of scalping type trades because the leg lengths up are so small. You know, you could almost do, it was a slow grind down. So if you did the aggressive trend trade in here, where you sold every time it went into the overbought, sold the open of that bar, sold the open of that, the open of that bar, sold the open of that bar, sold the open of that bar, sold the open of that bar, all the way through there. That that would have been a pretty good way to trade that stuff in there. All right, eventually give you a big leg length here with a push down right here. It would have gone just enough to get the stop to break even, maybe take a little bit of profit in it. Pulled back up, give you another one right here. You would have been trading off the 100% retracement right there. I probably wouldn't have wanted to do that trade, but it was there to take anyway. Moving forward over here, you flip the YBR. There was a trade here you could have done in here. We flip the YBR. Then in here would have been a trade right here. I wouldn't have wanted to do that. That would have been 100% retracement of this little tiny leg. It would put you in right there with nowhere to go. And you had more of the same kind of stuff here. It was sideways for a little while. The only way to trade this sideways stuff is aggressively. All right, you have to trade every time it went into the oversold, buy the open of the next bar. In the oversold, buy the open of the next bar. In the oversold. Well, in this case here, it flipped the YBR, so you wouldn't be buying the open of the next bar. Anyway, that was the Russell today. Right? Wow, I only did one market so far. We'll do the ES now. On the ES, we go back to the beginning. And here we go. Almost back here to the beginning now. Here we are. All right, so our first trade on the S was right here. We stopped out minus 10 ticks. It did eventually go down and do what I should have done, but we stopped out minus 10 ticks on that one. Then we had a break even there. Then we had a +6 that got us to -4. Then we had a break even and a +8 that got us to +4. And then we had another +8 right there, got us to +12. And then a +10 that got us to 22. And then a +1 that got us to 23. Now, I was going over this morning about the different types of pullbacks, the aggressive pullbacks and the conservative pullbacks. You can see right here, this retracement was at the 50% mark right here. We did a conservative trade here on the down close. Picked up 8 ticks on that, and then it didn't put in a lower swing. This was an important thing this morning. This was a word that I was trying to get, but this was important this morning. It didn't put in a lower swing, so it's good that you understand that it doesn't have to put in the lower swing. It's more important that it gets from the overbought to the oversold. All right, so it pulled back and gave another trade right here. Now this was an aggressive trade at a 50% retracement. All right, if you take this right here, this is what the leg length was like, right? That's what our leg length was like. So right here was a 50% retracement where that candle opened up. Right here where that candle closed and that next one opened up. So we took 10 ticks on that one. We took 8 on the first one, 10 on the second one, and then I didn't do the third one because I was talking about the first two. But the third one was also a 50% retracement you could have taken right here. Now, the next trade in here, I did not write down. We had a 2 of 10. That was a 1 right there. We did write that down. I got 1 tick on that, and that was where we stopped trading it. If I scroll, let me grab this and slide it over here so those aren't keeping popping up here. For those of you guys that have access to the TIQ videos, I mean, you all have access to it, but anybody that goes out to the TIQ videos, I added a couple of videos in there today. One was Dwayne's talking about the daily outlook, and one was how to get rid of the confirmations on the Sierra Dom, and the other was aggressive versus non-aggressive trades. This right here is what I just talked about right here on the ES. All right, but I made videos out there for you if you want to go check that out. If you are not a member in there, it is a free channel. It's a public channel. The link to get in there is right here. Okay. I will paste this out there. If somebody types something into the box, I will paste that out there for you guys to click on if you want to. In here, I wouldn't want to do this trade. I would have been looking for a deeper pullback on that. This was a great spot right here for a trade. Right there was a great spot for a trade. After that leg length down, this would have been a good spot for an aggressive trade right here. Right, the short leg length down there, this would have been something I probably wouldn't want to do. This would have been a great spot for a trade right here. Okay, it wouldn't have been a valid trade because that didn't make it into the oversold, but it would have been a good spot for a trade. Ran up, came down. This is not far enough down for me to really want to do it, but this would have been a good spot for a trade here. This right here would have been, if we had it right here, that right there wouldn't have given you much room to work with, so I wouldn't really like that too much. We switch directions here. This right here aggressively was a good spot for a trade. Now, I don't know if you guys see that. From this leg length right here, that's a 50% retracement of that leg length. The whole leg length, it would have been up here, but ran all the way up here, came all the way back down here. This was a good spot for a trade right here. Do you see what I'm looking at? I don't know if you see what I'm looking at when I keep saying that. Right there. That was a good spot for an aggressive long trade right there. Well, actually right here. Conservative trade, I guess. Ran all the way down here and pulled back just a little bit. Ran all the way down here and pulled back just a little bit. Ran all the way down here and pulled back just a little bit. And then it finally got some kind of measured lengths in here. So these measured lengths would have been good tradable stuff. All this up here would have been not so much tradable. But all this stuff right here went down, pulled back 50%, went down, pulled back. Well, the entry would have been at 50%, went down, pulled back 50%, went down, pulled back 100%, went down, pulled back 50%, went down, pulled back more than 100%. So you might have skipped that one. Went down, finally pulled back here, a little, almost 50% of that leg down. So there was some pretty good movement in there. Okay, and that was the ES. So right now you'd be drawing from right here. Actually, be drawing from right here up to here. So this is 100% retracement. It's late to do now. You would have done it from here, the open of that bar right there. Okay. And that is it on the ES. Now the NQ. We started out with a stop out here on the NQ today. We traded the NQ more today than it seemed like we had most of the week. But right here, we started out with this. No, that wasn't it. Oh, it was it. We got 2 ticks on that one, and then we got minus 60 on that one. So that brought us to minus 58. Then we got a plus something on that. That got us up to plus 13. I actually did 3 trades at once there, and they all ended up being winning trades. But I just counted the one. It wasn't the full 75 ticks though. It was 71 ticks, I think. 71 ticks is what we ended up getting on that one. They went from 13 up to 46, so we had 35 right there on that one. Then went from 46 up to 86, so we had 40. And then went from 86 up to 98 somewhere over here, 86 up to 98. I think that's where we ended it. 98 ticks on the NQ. Now, looking at the NQ, all this movement that we had here on the NQ, we also had on the ES. I guess all the indices started to crash here around the same time. There wasn't really a lot of good trading going on in here. You could have done, every pullback into the overbought, you could have just sold. Once it came out of the overbought, being conservative, you could have done that every time if you wanted to, and it would have made you some money. But the actual good spots to trade, this right here was a pretty good spot on that leg length. This leg length right here. This right here was a good spot on that leg length. This right here was a good spot on that leg length. This right here, not really that good. Well, it didn't turn into a trade anyway. This right here would have been, you'd been looking at this leg length from here to here. You guys see that? Where it came out of the oversold, out of the overbought, and went back into the overbought all the way up here, the high and low in between that. So this right here is where you're looking for your trades. See, we had a good spot to trade that right in there. Okay. It didn't put in a lower swing, but it doesn't matter that it didn't put in a lower swing, right? The more important thing is that it made it from the overbought to the oversold. Came back from the oversold into the overbought. It did 100% retracement of this leg plus some, but it stopped right here at this leg. So you could have shorted it based on that right here at the YBR. Now, every now and then when I see something pull back deep like that, I'll crunch it up like this and say, is there a really good reason for it to short from right here? Is there some other area of resistance looking left that we can't see when we're looking at just this little microcosm of chart? And there was, and I found resistance here before. So if you have that, you have a reason to short it from there, you are hitting some area of resistance, then just do the conservative trade with the short. Okay. From there, it pulled all the way back up into here, but it flipped the YBR on you. You could have shorted right there. You might have shorted right there, and that would have stopped you off. It changed directions. This was not really a good place to trade. After it went up into the overbought, then you had a new leg, which would have been right there. That was not really giving you anything to work with. It dropped all the way down here and then did a slow grind all the way back up. And now it's dropped down into here. Not really anything to work with here either. That was the NQ. Right. Now gold is the only one we didn't do. And gold, I went back and forth quite a bit on gold today. It seemed like my high on the day on gold was 34 ticks, it looks like. Yeah, my high was 34 ticks, and we ended up with 16. But we'll go back to the beginning here. And here we were. Our first trade on gold right here, we picked up 10 ticks. Now, I was negative on the NQ at that point, so that wasn't enough to get the goal for the day, but it did contribute to the goal. But I did finally get that 71 tick win on the NQ. All right. So we picked up 10 ticks there, and then we grabbed another 10 there to get us to 20. Then we had a break even, then 2 to get us to 22. Then we went from 22 to 34, so we had 12 there. And then we stopped out and went from 12 down to 19. Then we went back from 19 to 21, it looks like. And then 21 to 31 right there. And then we stopped out. It brought us back down to 16. Now, that was the end of the morning session trading. But looking at the way the market's acted, if we do it bar by bar, let's just do it bar by bar. Okay, just do a little lesson here, bar by bar, for anybody that's watching. So right in here, what you're looking at, right? It pulled back to 100% retracement of this. It came from the overbought, went into the oversold, went into the overbought, got to the prior swing high. So at that point, your leg length is from here to here, right? So right here is your 50% retracement, and right here is your 100% retracement. It's kind of tight. You had to do a 50% retracement, so you could have been waiting for the 100%. It wouldn't have been a trade at 50% anyway. Down here at 100%, you could have done the conservative trade. You could have done the aggressive trade. I probably would have waited for the conservative trade where it came out and it gave you this much from here to here to get some profit. Okay. So once it did that, now you have another leg length. So at this point, your midpoint is right here. Okay. That's what you're looking for. So right there, you have an entry point right there where it went into the oversold on the down close right here. You could have been aggressive on that. Taking the trade right here. Now this is the gold, 9 range gold. So you would have had in that bar right there if you were aggressive. Could have gotten filled and had 9 ticks in that bar right there. I don't know what the next bar looks like, but you would have had 9 ticks in that bar. Right, the next bar continued down. And so you would have had 9 ticks in that bar to begin with. And now it continued down and did 100% retracement again. All right, so your leg length is still the same thing right here. Right, still got the same leg length going on. But now, because it did the 100% retracement, this midpoint right here could be your area of resistance. That's the one thing that I would have been concerned about. If you do 100% retracement, you're not necessarily looking for it to get all the way back up here. All right, to the prior swing high, you're looking for the midpoint at that point. And that's where it is right there at the midpoint. Now, I don't know what happens next, but I imagine we can see it does do another 100% all the way back up to the top. So what you're in right here is wide ranging chop. Okay, that's what you're in. So now you would anticipate it's going to pull back at least 50%. And the next down close right here, the down close after this one would get you at 50%, just a little better. So you could be aggressive and buy it there, or you could give it the 100% and let it go down to the bottom. There's 2 ways you can do this, because you see this right here from the midpoint right here, a down close on the next bar is going to put that into the oversold. All right, it's going to put it in the oversold. It's going to give you a position to take a trade if you want to aggressively. Okay. It closed up, so that changes everything. Then just going through it like this, now you got a new leg length. Okay. You got a new leg length to work with, and now still got a new leg length. Okay, so now your leg length goes like this. You'd be looking to trade right here in the middle of all this, somewhere right in here. Right, that's what you're gonna be looking to trade. Okay. So you want to have that first pullback is not enough. Okay, that's not anywhere near where you want to trade. The next one gives you the wick, but the next one, it gave you the wick right here. So what I would have been saying is if you get a wick down here that hits there and you get an up close on that, that would be something that you could do, but you're not going to have any room for it to do anything up here on the top side. If you do have another leg length like this, then that would be great. But that's what I would be saying right here. If you get a wick that comes down into this area, now I just eyeballed that, but if I actually drew it, it would look like this, right? If I actually, it would look just like that. So my estimate was pretty close. So that wick wouldn't have been far enough down for me. I wouldn't have wanted to trade that right there. The wick would have to go down deeper. Okay, let's see, but I had to go down right in there. And so the next one, you're going back down. You came out of the overbought, out of the oversold, and then going back into the oversold. So you're not going to be looking for a trade on the long side here anymore. You guys see that? So right there, it comes out. It doesn't matter anymore. Now it's going to put a higher swing in. It's got to, well, it's not have to put a higher swing, but it's got to get into the overbought like it did right there. So now you have something to work with again. Okay. What I would want right now is to get a flat spot on the top, down here, and go up a little bit higher, complete this leg length right here. Right. That's what I would want to see from here. And that looks like this. Right. So this is something I showed this morning. If you have this whole thing with the leg length and the time, this kind of works out to be the diamond principle, right? You just put it there. So that's what price should do. Okay, now let's, oops, I don't mean to do that. Let's see what it does do, right? It goes up to that point, the prior swing high. So now you'd be looking for it to pull back, but the pullback is going to be small. It hits the prior swing high, then here it is. Okay, so you got almost 100% pullback right here. It's not really a place you want to trade right in here. This down close right here, you could have, it's 50% of this leg. You could have gone aggressively long. You would have went long back down here if you did. And that would have worked out for you. You did aggressively long on the open of the next bar. But you're looking for that to get up to the top of there. And you see it failed to get up here in the time that it did it the last time. It failed to do it, right? But it did get up to the prior swing high. You went from oversold up to overbought. And it got up to the prior swing high. So now it's pulled back. You're back at 100% retracement right now. This is a place right here where you could have gone long aggressively. I'm sorry, you can't. That was the bar before. It would have been right here. Right? You could have gone long aggressively there, but now you go long conservatively right here. Only anticipating a move up to here. All right, only anticipating a move up to 17.2. And it gave just a little bit of chop in there and it turned down, flipped the YBR down. So you never got this. That never happened. It stopped right here. So now that it's flipped the YBR down, your pullback spot is right here. Right? That's the place you want to enter now. Right here. You guys see that? That's the place you want to enter. Oops. It's not really a horizontal line, but oops, I didn't mean to do that. Oops, going back to this. See, right in there, you would have been considering an aggressive short entry right in here is what I would have been considering. And if you did do that, now you'd be in the money. You'd have been really close to a stop out right there, but now you'd be in the money on that aggressive short trade. And so what you want to see it do right here is put in a lower swing, continue the trend down. That'd be great. I don't know that it's going to do that, but what it did do is went from overbought down to oversold. So you know you have a setup for another trade. Should be right here at 34.14. I mean 14.4. Okay, right in there. 14.3 is what it went up to. It didn't get a trade yet though, because it didn't get into the over. Actually, no, it didn't get into the overbought, so you didn't get a trade yet. All right, so now that it's done that, the line moves down. So now it's 14.2, roughly 14.1. Okay, you're looking for it to get into the overbought. Now the line moved down again. So now you're looking right in here somewhere, a little below 14. Right, and there's a good spot for a trade. Oops. What time is it? Gosh, I haven't taken a single trade. I'm just talking about this. Okay. Well, let me just start the trade. Okay, I went through enough of this. Sorry, I got in the zone there.
You were in the zone, man.
It was. All right, so on the Russell right now, all that same stuff that I just said, we're looking here on the Russell for this to get down to right here. Right, down close on this bar is not going to be good. A down close on the next bar would be. Right, a wick on the next bar. A wick on the next bar into this area right here with an up close would be something that you'd want to trade. Right, because this is going to put it into the oversold right now. This down close. And we'll see if that comes together just right. This right here, and up close on this bar right now on the ES, or even just trading the ES right there would be okay too, I think. You wouldn't really need the up close, but now you got the up close. This didn't give us a down close over here on the Russell, so that wasn't any good. But this right here on the ES, what I was just saying, you could have gone long right here or on the up close right here where it came out of the oversold. All right, because what you're looking at is this right here. Right there. It's a great spot to take a trade right in there. Right. Nothing there, really. And you could do it right here if you wanted to. You could have done it right here aggressively. This is what you'd be looking at. And you could have done it right there aggressively if you wanted to. Okay, so the Russell's still got a chance here on the down close right now. It's going to put us in the oversold. It's not going to be low enough to take the trade, but a wick on the next bar into this area and then an up close. Oh, it didn't even put it in the oversold. Wow, I'm surprised. It didn't even put it in the oversold. I thought it was going to. So the next bar could give you the wick. You really need a down close on the next bar. Next bar, if it gives you a down close, you could be aggressive, actually. You'd be aggressive and just take the open of the bar after that, or buy the down close of this bar. Okay, what that looks like on the DOM, let me show you. 61.3, you'd be buying 60.3 like that right there. Right, that's a limit order. It's not a buy stop limit, it's a limit. That says if the bar closes down right here at 60.4, it's going to fill me. Okay, well, I'm just going to go in right here. I'm going to try to go in right there because you got to do the conservative. Actually, it's not working out. I missed the whole thing. I was trying to put the order on to be aggressive on the down close of this. Right, it came down to hit it right here and it gave the up close. I wasn't expecting it to give the up close right there. That would have been an okay place to trade right there, but I was really looking for the down close. In the meantime, we had this right here that you could have done that I didn't. We had this right here that you could have done that I didn't, and then it pulled back again. Now, when it pulled back again, you don't have any space in here. Let me show you what I mean. Sorry, that's not right. When it pulled back again, you're going from here to there. That was for that pullback. Then from here to here. Yeah, it pulled back 100%. So it's kind of messed up in here. That's not the right retracement that you're looking at right. Over here on the gold, because it went 100% back to here, it changes it now. It's not even 100%. It's close to 100%. So you're still working with the 50% level on this. Extend that out. Okay, and over here on the gold, you got to draw from up here right now. From there down to there. So an up close on this bar will put you in the overbought, and you could sell aggressively on the close of this bar on the gold. Okay, so this is what that looks like. 14.5, be selling 15.5 like this. Okay, and it just filled me at 15.5. So I'm short right here at 15.5 on that. I aggressively shorted the up close right here as it went into the overbought right there at the midpoint. Okay. And now 5 ticks into profit and the stop goes to break even. So it's got to get down to 15.0, which it should get down to 13.8. It should get all the way down here right slide that over here and just keep an eye on it. These all went up like they should have. And this should go down now like that right there. Stop to break even. Now it should go to 13.8. I'll put a target there at 13.9. Okay, we'll see what we get. We end up with a break even on it. But we did have 5 ticks in profit at one point. Oh wow, man, I ran out of time. What happened? All right, sorry about that. I only got to put one trade on. I did do a lot of talking though. I was in the zone. This was a great trade off that area right there. This was kind of a messy trade to do in here. The trade to really do that we did see was this one right here, but I wasn't able to do it. And this one over here, the trade to do was this one right here, the aggressive right there. Okay, so there was an opportunity to trade everything. Well, if you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. This is no credit card required. It's going to bring you to registration page. Just fill out the form. Right on the registration page, just fill out this form. That's all you need to do. Once you do that, you will have given us your TradingView login ID. So we'll enable the indicators for you. Your indicators indicating on your charts. Now, again, we're wrapping up the month with $20,652 per contract, averaging $1,086 per contract per 2-hour trading day. Right? And today, just a little above the average on the month. Just a little bit, like 50 cents, 53 cents above the average on the day. So the daily average on the month is what I mean. That's what we ended up with today. So it was pretty good, pretty fitting into the month.
Very, very good. And if you take the trial today, okay, you're going to get 2 free days the weekend to kind of get familiar with the indicators. Your trial will officially start Sunday night at 6 p.m. Eastern when the market's open, and it'll go all next week up until Friday at 5 p.m. Eastern.
Yes.
Remember, we're futures traders. We work around the clock or whenever we want.
Right. Yes, whenever we want. And sometimes that Sunday night open is a good time to be working.
Sometimes.
All right. Well, with that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yeah. I am. So, I want, if you can stick around just a second. First, let me ask you recap of the morning session.
It took 7 minutes and 4 trades to get to $1,650 with 10 contracts on.
Great job.
Thank you.
Okay, do you remember roughly what time this morning I made that comment in the live training room about 58.99? That I had to sell over there.
I'm pretty sure I recorded it. Let me just go check that. It was, I think it was around 11:21, something like that. I think that's when.
Yeah, so I was looking for price to drop. Han had asked me a question and asked if I could send a picture, and Han's watching live right now. So it's kind of hard to see. Let me spread it out. Okay. Below this candle was 59.15. So I was looking for a break below the low of this candle down to the zone.
Yep.
It's trading around that candle right there. Yeah, I was waiting. I was looking for this. I was looking for this candle to break the low of this candle.
Mm-hmm.
And there's 58.99, and then we did, and I was on the 50 range, so I had, pretty good size stop. And it pulled back to the BBC, and down it went. So let me make a picture of that.
If you want to see,
send it to
you can actually hear Dwayne talking about that if you want this morning. If you go to the TIQ videos Telegram channel, the last video in there, Dwayne, it's my chart, but Dwayne's actually talking about it, and I was pointing to things on my chart while he was talking, when he was doing that.
Okay, so let me paste this in for Han, and then Han, I'll write in I'll write in some information for you when I finish this broadcast. Well, Michael, thank you so much. I hope you have a wonderful weekend.
Thank you. You too. Be safe. Stay
I'll
and
talk
see
to
you.
you. Hans says, okay, I see it. Beautiful.
Excellent.
Okay. Now, guys, we've already gone through all the markets. We got up to crude. So there's the ES. And we hit the short target multiple times. We already did the Dow where we hit the short target multiple times. This window down here is still viable if the market sells off into the close. It's got a little pep in its step right here off the low of these bodies from yesterday. So we'll see if this pullback holds and if we get another leg to the downside. We already did the Russell, short target, short target, short target, short target. Okay. In Q, short target, short target, short target, short target. And now, this may not come to pass till Sunday night, if it comes to pass. So we'll see. Now, we left off with crude. And here's where we opened last night. We dropped to the short target, goal for the day, consolidated at the zone, red and falling turned to blue and climbing, and it took us up to 3 ticks from hitting the long target. Okay, so this one candle right here opened at 53 and only made it up to 70. So 60 from 53 to 63, that's your goal for the day. So that one candle right there is more than enough for your goal for the day. Okay, and you'd expect resistance right there at that wick right there from yesterday. That's my long target. Missed it by 3 ticks, but things worked well. Then everything changed at 7:30 with crude. There was a news article came out. I read it to you at the beginning of the broadcast. If you missed the beginning of the broadcast, you can listen to this broadcast in its entirety by simply going to youtube.com/CFRN about 30 minutes to an hour after I end the broadcast. So we came down through the short target in the zone. Buyers stepped in, drove us back up to the BVC. The pullback held. We put in a lower low. Now it looks like price is trying to overcome the BBC. But the top of this wick right there, that's potential resistance. And then you got a bearish cross right there. That's potential resistance. So if I were going to give you a long window of opportunity, I would get up above these areas that are a little worrisome. I mean, as far as running into potential resistance. And I think that, we'll call it 61 bucks up to 61.20. That's $200 per contract traded. If you earn the right to trade 10 contracts, it's $2,000. Goal. Now, here's where last night I told you I realized I should have rolled to the Q contract. This is what it looked like on the M contract. Okay, and as you can see, you know it's time to roll when candles look all weird like this. But on the M contract, it did in fact hit. Now, let me bring back up the concierge trade alerts, because I told you and showed you earlier that I went back and redid them for the Q contract. So let me bring it up here and show you just again if you did missed it. And let me write these numbers down. 33.55 and then 33.30. Okay. All right. So now I can take this down. I can roll this to the Q contract as I did last night to create those alerts after the fact. Okay. So 33.55. And 33.30. Okay, so we hit the short target, traded almost down to the zone, and then on the pullback we reached up. A lot of times when you trade through the short target or the long target, if price pulls back up, see how that became resistance right there? Okay, so you had a chance to get your goal for the day there. And then once price is below, and we're below the BBC, and you have red and falling, I mean, you could have shorted this candle. Now this is gold. You only need $1 move in gold to get your goal for the day. It opened at 33.25, and it put in a low from 25. Come on, 25 down to, we'll call it 19. That's $600 per contract traded. That's the potential in that 1 30-minute candle. Okay. When the price of gold moves $1, that's worth $100 per contract traded. When crude moves $1, that's worth $1,000 per contract traded. When silver moves $1, that's worth $5,000 per contract traded. So we're now officially on the Q contract. So all the alerts coming out Sunday night will be based on the gold Q contract. And the weekly trading zones for next week will come out Monday morning, 6:15 a.m. Eastern, God willing. And that will be in the zones for the week. So this is an interesting development. We've pulled back to the BBC and found resistance. That's what we expect. But now, look what's happened. Blue and climbing has crept into the picture. That's bullish. So what we may see is price overcome the BBC. Now you got potential resistance there. You got potential resistance there. So you don't want to trade into a brick wall. Instead, try this. I actually want to pull that down a little bit. I kind of want to line it up with the top of that body. That candle opened at 33.18.4. So the top of this window, wait a minute, it's candle opened at 33.28, I'm sorry. So top of the window is 28. So you would enter at, call it 26. Go from 26 to 28, and that's $200 per contract traded. Now, if in fact the pullback does hold and price trades through blue and climbing and the zone, so you got support times 2 right here. You got a beauty right here. That would be selling roughly 33.04 down to 33.01. $300 per contract traded. That's market structure. Okay, silver. Here's where we opened, right at the zone. Got below the BBC, hit the short target. You only need 2 pennies in silver to get your goal for the day. So like this one little red candle right here, I don't even know if I can get a reading on it. Opened at 37 and it dropped 3 pennies to the target. So that's $150 per contract traded in that one little red candle right there. Then we overshot the zone and found support. We found support in some unusual spots in a lot of the markets today, but I'm not going to worry about that. But look here, on the way down, you see how the black step line and red and falling are running parallel on the way down? But right here, the step line crosses red and falling. That tells you the market's going to attempt to retrace to the BBC. And it did. And with the help of blue and climbing, it made it all the way to the zone above. No, missed it by 2 pennies. Okay, close enough. Resistance sends the market looking for support, which it found here. Again, that's buyers coming in early. Now the step line's about to cross red and falling, so look for a retracement back to the BBC. And remember, the pullback holds more often than it doesn't. If it holds, we get another leg to the downside. If it overcomes, then I'd be careful on the upside. Maybe 37 to 39. Yeah, that would be valid on the upside. See, that's the beauty of learning market structure and how to read a chart. You can map out your trades long before they happen. And then you just sit, read some scripture, listen to a nice sermon, listen to praise and worship music, pray, whatever floats your boat, and let price come to you. Okay? All right. So one last look at the daily chart. We got a little wick on the bottom of that red candle. So some institutional buyers came in to see if they could move price higher. And maybe they will, but if they get if we get stuck in this area for too long, then they're just gonna stop buying temporarily. They're gonna hit the pause button, and when they do that, bang, this thing will go right to the BBC like a heat-seeking missile. So, all right, wonderful week. If you want to become a member, go to mytradingiq.com. Watch the videos, read the content, and when you make up your mind, send an email to support@cfrn.net. In the email, tell us you want to become a member. We'll send you an email filled with information about what it means to become a passport holder, and there'll be a link you can click to seal the deal. You're going to get 2 hours of live training every trading day. Every trading day. 2 hours, interactive, live markets, live trades, an explanation of every trade, answers to all your questions, and you're trading along in sim so that you can qualify to go live. 9 out of 10 new traders fail because they don't have a teacher. We've plugged that hole. We give you a teacher 2 hours every trading day. On top of that, private one-on-one mentoring, the strategy you learn, the indicators you own are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames. As a passport holder, you'll get the Logic 247 alerts around the clock, the concierge trade alerts every evening, the second they're published. And I always try to get them out, if I can, 5 minutes ahead of the open, which is 6 p.m. Eastern. So I try to get them out at 5:55. Monday morning, 6:15 a.m. Eastern, you'll get the weekly trading zones. Once they're published, they're carved in stone for the entire week. You'll be able to attend the members-only workshop every Thursday night. And you'll get the golden key that opens all the private channels in Telegram. It's everything a trader needs, all under one roof, one low price. It's a good deal, I checked. Okay, let's wrap up the week with a good word for the day. Yesterday we did part 1. Much more or much less. Matthew 7:11. How much more shall your Father give good things to them that ask him? Try to imagine the abundance God has prepared for you. 1 Corinthians 2:9. Then decide that the language of your heart will be the much more of faith, not the much less of unbelief. Number 1, your salvation supersedes your sin. No matter how sinful your history, if by the one man's offense many died, much more the grace of God and the gift of grace of the one man, Jesus Christ, abounded to many. Romans 5:15. Rejoice, you're much more forgiven. Number 2, Christ's life in you continuously saves you. If he lives in you, his salvation remains actively at work in you. Romans 5:10. For if, when we were enemies, we were reconciled to God by the death of his Son, much more, being reconciled, we shall be saved by his life. Number 3, the Holy Spirit will be in you abundantly. Luke 11:13. If you then, being evil, know how to give good gifts to your children, how much more will your heavenly Father give the Holy Spirit to those who ask him? He gives the Spirit much more to his children. Number 4, you can triumph in life through Jesus. Much more, those who receive abundance of grace and of the gift of righteousness will reign in life through the one, Jesus Christ. Romans 5:17. By God's grace, you can walk in much more victory. And number 5, all you need, he will provide. Matthew 7:11. If you then, being evil, know how to give good gifts to your children, how much more will your Father who is in heaven give good things to those who ask him? As you develop a much more mentality, you will begin to enjoy the good things God provides. And that's our good word for the day and the week. Have a great weekend. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.